This is Alan Bush with ADMIS with the Daily Financial Forecast for Tuesday, October 18th. Stock index futures putting in some good gains in the overnight trade as commodity prices increase. Also, there's a growing belief that the Fed may be a bit more tolerant of higher inflation levels, suggesting that they may be a bit less aggressive in their tightening down the road. So we continue to believe that the bull market is intact for stock index futures. Also thinking that next year we will see some new highs across the board in all of the major stock index futures. Now moving over to the currencies, seeing the dollar index trading just a little bit lower. Recently, however, we did see some 11-week highs in the dollar index, but I'm starting to think now that this is a good time to take profits on long dollar positions. We've been bullish the dollar for quite some time on ideas that the Fed will be a bit on the hawkish side, but I think with prospects of a tighter Fed diminishing to some degree, I think this is a very good time to become neutral on the dollar index. So any longs that you have, I think this is a time to take profits here. Also, by the same token, we believe that if inflation is increasing and that the Fed will be slow to raise rates, the prime beneficiary, I think, is the commodity currencies, but probably not really the Canadian dollar. I much prefer the Australian dollar over the Canadian dollar. In fact, the only position I would take in the Canadian dollar would be to be shorting it against longs in the Australian dollar. So we are now turning a bit more bullish on the Australian dollar. Also, we are seeing the pound firming up. This after inflation in the UK coming in stronger than expected on an annualized basis, up 1%. That compares to the expectations of up 0.9%. So once again, if you're long dollars, this is a time to liquidate, take profits, in a time on any kind of weakness in the Australian dollar to establish long positions. Now moving over to the interest rate futures markets, we're seeing the long end under some pressure as commodity prices increase. We do believe that inflation will become more and more of an issue, and we're already starting to see that, and that has to be viewed as a negative for the 30-year bonds. Don't forget that inflation tends to affect the long end of the curve more so than the short end. So the bonds, I think, is the instrument to be trading from the short side. Also, we have seen some pressure in recent weeks. More of the same, I think, is in store. So continue to trade the bonds from the short side. And this is a trend that I think that will probably continue for quite some time this year and well into next year. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.